Gentlemen, and welcome to this webinar in It's Business Time, brought to you by Associates Chartered Accountants Limited, or Jackal, as many of you know. My name is John Maybury. I'll be your facilitator for the next hour. Shortly, we'll introduce our panelists. Next hour, we want to address the 4 biggest issues that we see business facing at the moment. The panelists will do a 30-minute presentation. This will be followed. We'll start with the questions posed at the session. But if you have a question in the live webinar, even if it's not specific to the presentation, please still ask it. Please familiarize yourself with the dashboard panel inside of. There's a question area. Your questions will come through to me and we'll fire them off to our panelists in the Q&A. If we do miss your question, we will come back to you after. At the end, we will announce 3 lucky attendees who will win a remarkable chocolates valued at $50. Something there for some 3 lucky people. Mark Davies. Mark is the leader of Johnston. He has 30 years specialist tax experience from multinational and large to family and SMEs. He and his team are adept at dealing with a wide range of issues and tax opportunities, ranging from proactive structuring advice aimed at asset protection, efficiencies to managing complex IRD audits. Our second panelist, Logan Granger, has been a chartered accountant for over 20 years and became a director of Jackal in 2006. Logan and his team work in the advisory boards, diligence, business sales, acquisitions, and much more. Logan likes to use his extensive network of good contacts to help clients resolve problems and make the most of opportunities. The opportunity for you today is advice the executive to take to get back in business. Mr. Logan Granger, the floor, sir, is yours.
Hey, thanks, John. Thanks, everybody, for attending. Look, we're going to kick this webinar off with Mark Davies, our Director of Tax, and we're just going to cover a couple of what we think is really key topics that are coming up a lot at the moment. Before we really get into a couple of those bigger items, look, something that's sort of come up this week a little bit, and I want to really get those things clear. We're not tending to politicize this, but what we want to do is, look, there's enough people out there that are having a crack at the government. We might do it personally, but in these kind of forums, and we've got our own personal views, Mark and I, but in these forums, what we're trying to do is encourage our clients to play the hand they're dealt, right? From our perspective and my professional persona, and that we've got to work with government to help you guys get the best results, right? There's plenty of people out there that want us to rip the government to shreds or support them. We see our job is to get in there and help you guys, help all business make the most of those leverage points. Yep, we're absolutely going to get in there and push the government on those issues. We're going to push them professionally behind the scenes. We're going to encourage other professional bodies to do the same, and other industry groups. But we're probably not going to want to get too personal about it. And that's, you know, I'm going to have some guest commentary pieces that will do that for me coming up. We're going to do a 5 webinar series that will cover a bunch of issues. We've got next week, same time, same place, the budget one. So we'll roll from here, and we're going to have plenty of dialogue around what's right and what's wrong. But primarily what we want to do as a firm and as a group is work hard as we can to play the cards we've got on the table and encourage the best cards to be laid on the table for us. Okay, that's how we see it. I'm going to just rip in quickly before we get into some of the other parts of the agenda into leases. We know there's a lot of problems with leases out there. We know that some of these things on both sides, for landlords and tenants, there's some issues there. Look, it's not too late to negotiate. Maybe you paid all your rent and you haven't got a rebate. Maybe there's some confusion in that space around what's a holiday and what's a rent-free period, what's going to go on. There's a whole pile of stuff in that area. Look, we're getting asked all the time. One of the things I'd encourage you to look at, it hasn't arrived here yet, is use the Australian code of conduct that they've devised for commercial leasing as a guideline. Go there, go to the Australian COVID website, look it up, just type in Australian code of conduct commercial leases into your web browser, have a look at that. That's not a bad guidance for where you should be at least considering it. The other thing is get decent legal advice. I've been talking to these lawyers. I've talked to Aaron Nichols at Nichols Law. I've talked to Mike Alexander at Heasmith Alexander, Sean Lynch at Lynch & Co, Michael Hempel at Metro Law, Kevin Pearson at Davenport City Law, James Corcoran at Stace Hammond. Like, there's a number of guys there. They've all been negotiating with landlords and for tenants. I've named them there. Come back to me if you've got an issue in that regard, because we've got 5 or 6 different lawyers there that we can give a shout out to that we think are doing a great job in that space. If you're in sort of some financial trouble, you need a bit of a hand and you need to think about where your business restructuring is going and that sort of stuff. We've worked quite well with Steve Lawrence and Chris McCulloch at PFK. Again, there's some people there that you can talk to. You can talk to us. So if you've got some concerns in those spaces, give us a yell back. I think that's, you know, we've by and large around those landlords leasing type stuff, we've seen some really, really good advice and action coming from our side. We've seen our landlords, I've got a couple of landlords and they've acted really honourably. So it's not without the realms of possibility, right? And again, the other thing is if you haven't done this stuff yet, I'd really encourage you. Had a small client, it was only last week, they'd gone and spoken to their supplier about terms and extended what they needed to pay over 90 days to get their supply going. And the supplier said hardly any of their customers had come to them to deal with it. Now that was only last week, and they got a really big ups as a small landscaping business who had gone out to their key supplier and said, look, we can only do this. Can you help us out? And they said yes. So if you front foot this stuff with your suppliers and those kind of things, you're going to get some traction, right? Don't just, you know, sit back. So now what we'll do is we're going to come into the stuff with where to get our advice from and sources, who to listen to and where to get advice from. Mark, do you want to kick off with some stuff on that one?
Yeah, thanks, Logan. Look, this is, unfortunately, this is one of the challenges we're facing. There's no one single place to go and get all the information we need on this, unfortunately. There's the COVID website that the government's running, but not everything you need is there. So one of the challenges we've certainly had is trying to find high quality sources of information out there and take the best bits from each and then make it practical, because there's a lot of detail and media commentary around what certain things mean, a lot of comments somewhat on the run by politicians and ministerial people, and not a lot of detail at times. So one of the challenges has certainly been trying to advise clients and intermediaries when all we've got is essentially a press release from the government saying we're going to do this and you'll find out more in 2 or 3 weeks time. So yeah, that is going to remain a challenge, I suspect, because everything's moving so fast. And you know, what we've tried to do, obviously, Logan, is between us and our organisations is pull together some high quality sources of information. There's links to them on the websites and that sort of thing. And our job is to try and distill that detail down and make it practical and usable for, you know, people like those listening today.
Yeah, look, I think I'm up to volume 10 now on my blog, and the guys have got that there. I'd back every bit of advice I've got in there that I've got good sources. Look, Australia's got together a really sort of what I see as quite a superior model in terms of where you go to get stuff, right? The reality is we're not Australia, we don't have that, and we're going to have to push to it. But you've really got to narrow that channel, guys. You've got to get out there and go, look, who's my go-to people for a whole bunch of different things? And I think it's a big deal, right? So just find your trusted sources of advice who can give you good feedback, right? And I think that's critical, because the other thing that people are going to find coming out of this is you're going to have to cobble together assistance and resource from multiple places. I'm sorry, but you're not just going to get one place where you can go to get this stuff. You're not going to just be able to rock up to the supermarket of help and assistance and financial support and grab it off the shelf. The best businesses and the ones that are going to survive the most are the ones that are tenacious enough to actually go and find that stuff. And you're going to find it at the MSD, you're going to find it at the IRD, you're going to find it at your bank, you're going to find it at Trade and Enterprise New Zealand, you're going to find it within your industry groups, right? You're going to find it in community places. You know, there's probably a dozen. You need a short list, and you need to just keep working through them. And I think that's kind of critical. Mark?
Yeah, I couldn't agree more. And actually, you mentioned before, just before we move on, you were talking to a client last week, and they've only they talked to a supplier, and apparently they had been the first person to front up to the supplier and say, look, you know, we can only do this much. Can we pay over 90 days? I had exactly the same story from someone yesterday who, on the other side of the equation, their business had been had a customer come to them and say, look, we don't owe you a lot, but we can't do it immediately. You know, can we pay next month rather than this month? And apparently that was the very first customer again to make that sort of approach, which I guess is a little concerning because we're all in this together. So if there's a bit of give and take on both sides of the commercial transactions, I think we'll probably be better for it.
Look, the takeaway from this little segment, or the call to action, is if you've not done anything around things like leases or landlords or a bunch of business relationship stuff, you know, it's not too late. No, it's not too late. Don't sit there and go, oh, I can't approach someone because I haven't dealt with it. And maybe you're the supplier. It doesn't mean you can't get off, actually take the bat and go to your customer and go, look, are you having trouble? You know, maybe your customer can't come to you. So remember, it's a two-way thing. You can actually promote that forward. And it's not, you know, if you're a real, you know, if you're normally a real tough, like, you know, supplier relationship manager, maybe it's just another way to look at it. Okay, what are we going to go to now, Mark? We're going to look at the grant stuff.
Yeah, let's talk about that for a minute. We were told several weeks ago, I think it was $25 million put into the pot for advice under various sort of headings to help businesses go and basically pay for the advice that they need to get them through this in as good a shape as possible. What we're hearing is that money's running out pretty quickly. Hopefully on Thursday, you know, we've got a budget, and there's going to be a whole bunch of initiatives in the budget, and there may be more funding coming through for this sort of advice in the budget. But I guess the message here is if people want to have some business advice or business continuity planning advice or HR advice and that sort of thing, partly funded by the government, they need to really get cracking and at least get registered with the local business partner that's dealing with this. Otherwise, they're going to miss out.
Okay, so this is one of the really important parts of this section I want to make really clear. You've got to go, we'll have a little link in the next slide. There's a place to go. It's clear. The Regional Growth Fund place, New Zealand Trade and Enterprise, register your business. You just need your IRD number, and most of the other details will be in your head. At least register your business and link to it. Johnston Associates, South and North, have got all this stuff in there, what you can apply for, it's all there, right? So everything's under there. Some of the regions are under pressure, it's running out, but there's also, once you register your business with NZTE, with the regional business partners, there's other grants there that aren't specifically linked to COVID, right? So there's ones where if you incur, say, $5,000 worth of accounting fees, that NZTE, you'll pay half, right? It's not, this $25 million has been allocated to that. We're going to wait and see what comes out in the budget, and maybe they'll up it a bit more. I mean, 25 million, if I can do my maths right, it's about 25,000 businesses at $1,000 each, isn't it, Mark? I'll put you on the spot, mate. Can you count? It's round numbers.
Apparently we're good at math.
But I don't think $1,000 for 25,000 businesses is probably going to cut it. So, you know, they're going to have to do something about that, I hope. And that's one area we'll chase them on. It's not going to be enough if they actually want to get off the ground. And the other thing is, if it's first in, first served, I'm a bit concerned about that, because it means that because other people are still in a bit of a state of shock and they're not aware, even though I've been pumping out those updates and those blogs and stuff, and it's been in about the last 5. We've still got clients that aren't really aware of it, or they can't. And so, you know, you just really got to, if you're in doubt, register. It doesn't mean you've taken anything. I think this is a critical thing we need to get through here, is registering doesn't make you obligated to take it. It doesn't make you mean that you're going to have to give something back, right? So if you're fearful that you're going to take something and then you're going to have to pay it back, I'd rather you just registered now as quick as possible for whatever it's going to be. We might talk about the government loan scheme later. Just register for the bloody thing, get that bit done, and then come and see us and we'll talk you through those patterns. But if you're not registered, you're not in the window. Okay, so key call to action is, if you need funding for professional help and stuff like that, get in there, register your business and get it done now, and link to somebody and get that query through, and then we'll work out how to deal with that later. Yep.
Yeah,
and there's a wide range of things here. Mark, anything else?
Yeah, this is free money, people. So look, not often money's available like this. So yeah, at least register and then make a decision in the coming days as to whether you want to sort of push that through and actually apply for something.
So I still can't get you to say that the government loans are free money, though, eh?
Oh, we'll talk about that.
Okay, wage subsidies. I'll let you kick off with this one because you're a bit of a guru at the first part of the misunderstandings, and we can talk about the last bit at the end, eh?
Yeah, sounds good. This was probably the first major initiative, I think, fair to say, that the government announced, aimed at assisting businesses. It's really directed at employees, obviously, but while it sounds simple on the face of it, some people clearly have misunderstood some of the detail around it, and the communication at times hasn't been perfect and it's been a little bit ambiguous around it, so that's understandable. One of the key misunderstandings here, or there's probably two. One is this: to qualify for assistance under the wage subsidy, and if people haven't applied yet, they can still apply, and they can make a further application if you've got extra employees that you now need to cover. So a lot of people listening might have made an application and received funds already. That doesn't mean that you can't go back and get more if you've got additional employees that you want to put under here. However, it's a revenue-based test, and the key criteria is that over any 30-day period or month-long period, whichever, there is a 30% or more decline in revenue versus the same 30-day period or month-long period in the prior year. So there are people that seem to think that actually they need to be expecting a 30% decline in revenue for the full year, or 3 months, or 6 months, or a much longer period. I think there are people out there saying, well, it has to be a calendar month versus the same calendar month from last year. That's not what the rules say. It talks about a 30-day period. So that might be 5 days at the end of March 2020 and now that's good maths, isn't it? 25 days in April, back to back, a 30-day period versus that same 30-day period last year. So that seems to be a bit of a misunderstanding on some parts as to just how that time period works. New businesses, so businesses that haven't been around 12 months and therefore can't compare to the equivalent period last year, they can also claim. What they do is they look at a 30-day period and then look at some prior 30-day period and assess whether there's been a 30% decline in revenue against that prior 30-day period. So you might get a situation where somebody's comparing a 30-day period in April 2020 in the midst of the lockdown versus a 30-day period in December 2019 in the height of the pre-Christmas carnage, retail carnage that we get every year. In theory, that person qualifies because they can show a 30% decline in revenue. There is a little comment in the rules that says the decline has to be due to COVID-related factors. To be honest, I don't see that as particularly workable because it's extremely difficult, even with the benefit of hindsight, to go and say, well, that was because of COVID. I'd sort of defy the authorities to actually be able to enforce that. But clearly the intention is that this is supposed to be about damage done by COVID-related measures and lockdowns and such like, and trying to repair that particular damage as opposed to a normal slowdown in business. So what I'd say, where we've got businesses less than 12 months old, get some advice on it, because there's probably a bit of a higher standard around sort of documenting why you've made the claim and why you think you meet the criteria than for a business that's been running for more than 12 months who can compare a 30-day period sometime after sort of March or through to the equivalent 30-day period in the prior year. So like, the key message here, businesses less than 12 months old probably get a bit of advice around just how to make sure that you're satisfying the criteria, and then documenting that in case there's some sort of audit or review later.
Can I just jump in there? Just on a couple of things, I want to make a couple of quick points here. And I've seen a lot of stuff in the marketplace. It's not a morality test, all right? And so my view is, if you qualify, you claim it, right? Because if you qualify, and even if you don't think you need it, and you don't claim it, you could be handing your competitor a competitive advantage over you, right? It's a serious thing. It's like, you're still in business, you're still competing. It's all very well to go, look, we're all in the same boat rowing together, right? But the reality is, you've also got to look at your own business circumstances. So if you qualify and you think you qualify, grab it, right? Put it in there, use the process and pay it. That's my take on it. I mean, God forbid, if you think you need it, take some money out of your reserves for what you took, and then donate it to the city mission if it makes you feel better, but take that money, you know? I think some of those things around that, you know, Mark, if we talk look, very quickly, we should talk about the audit function and the preservation of information for that, because, you know, if you're on the cusp and say you only can prove in that 30-day period that your turnover dropped 29% or something, or you're on that cusp, number one is what should we very quickly look at there, because we want to move on to the next topic. But the other thing is also, if you're on the cusp, what should you do? And then audit information preservation, because now it's, you know, you're current, you've got everything, you should be sorting that out now. So those two issues to finish off with here, eh?
Yeah, that's starting to get a lot more airtime now in the mainstream media. So the morality of this measure, or claiming under this measure, is being questioned by some. You know, the law firms got a bit of a roasting last week in terms of some of the big advisory firms have gone and claimed and found that they haven't suffered the 30% revenue reduction, so they're going to end up paying some money back. I back your point. If you think you're going to be if you're going to be hit 30% or more, I'd think you go and claim it. And if you find out, you know, a week, a month, 3 months later that you didn't meet it, get it paid back. But
we should have the money there, right? Shouldn't be a big deal.
Yeah, that's right. Look, in terms of information, we're hearing about these 100 auditors that are going to apparently be going out there sort of banging on doors or checking whether people met the eligibility criteria and whether they've met the criteria, the ongoing requirements in terms of best endeavours to pay all the staff involved at least 80% of their normal pay, etc., etc. That means we need information on hand for when they come knocking on the door. And let's assume, each of us, let's assume they're going to knock on our door, because if we don't assume that, the risk is we get lazy, we take shortcuts, and we're not well prepared for when it actually happens. So assume they're going to come door knocking. You're going to need some information on hand. So what made you think that you're going to suffer a 30% revenue reduction over a 30-day period or a month-long period? You know, where's the information to support that contention? Where's the information to show that you paid all those employees in respect of which you claimed the subsidy at least 80% of their normal pay? Or if you couldn't meet that requirement, if you couldn't pay them at least 80%, where's the proof that you couldn't? Where's the commercial rationale for paying them less than that 80%? And where's the proof that you paid them as much as you reasonably could? So things like that, and I've got a list of about 8 or 9, I think, key pieces of information that people should consider, which I'll get put up on our website, I think. So things like that are well worth getting in place now. It's really hard to pull this stuff together after the event when you've got some sort of government reviewer or auditor breathing down your neck and you've got a business to be carrying on. So get it in place now while it's fresh and it's in front of us. Stick it in the bottom drawer and have it ready for when if and when they come knocking and want to see that, you know, that we've done things properly.
Yeah, because this could happen anytime over the next year or 2 or 3 years, right? It won't happen today. So once you've met this test, I think the critical thing to remember is once you've met this test and you've got the information, you can validate it. It doesn't matter anymore. It doesn't matter what happens tomorrow, the next day, or the day after, or the month, or the year after. Once you've met it, package it up so that you know when you get that call or anything does happen, you've just got it there, it's gone, and then move on to your next COVID task. Forget about this one. You've done it, it's gone, it's out of your mind, right? And I think that's the critical thing. So coming out of this, I mean, the key action point is if you've been sitting on the fence and you think you're entitled to it and you haven't claimed it, and that you've done that, get onto it and do it. Get your documentation done. If you've already claimed it, start gathering that documentation. Come and see us and we'll help you, or your advisor, and we'll help you package that documentation into a secure place, an area that means you can just hit a button and go, here it is. Now, at the end of the day, say they looked at it and go, oh, there's some, bits and pieces here, you've got to give us some of it back. That doesn't mean you're a criminal. Like if you don't have to give, if you have to give some of it back, there's some margins in there. Well, that's the way it works, right? But so I think just remember those kind of things. Just work with it. You don't want to be in the right place in the bell curve on this topic, right? You don't want to be at some kind of fringe area where you've taken it, then made everyone else redundant yesterday. So with the bulk of the people, you're going to be okay.
The other point on that is that there is an expectation that people will get some of this wrong, because this also applies if you expect a decline of more than 30% in a 30-day period versus last year. So, if you anticipate it. So we can't expect or anticipate with absolute certainty. Some people are going to get this wrong. What you've got to do, though, is make sure you're being responsible in terms of monitoring whether you've met the requirements and then doing the right thing if you find out you haven't. Simple as that.
Let's move on to banking and loan subsidy, loan things, IRD stuff, bank loans, finance. Look, I'll kick off here and go, look, I think there's a lot of talk around this 10K to 100K loans. I think a lot of really small businesses need to understand, unless you've got a lot of employees, it's going to be a pretty small loan. Okay, so it's going to be 10 grand plus, $1,800 per employee. So for many businesses, this is going to even be very difficult to even get to 30 grand on the IRD one. So again, when you're looking at the stuff and Mark and I are talking through this topic, remember, you might have to look at this as a relationship with, maybe you've got UDC as a financer, maybe you've got the bank, maybe you've got this, and maybe it'll be a real pain in the neck, but you're going to have to deal with like 3 different organizations to fund your business, and you're going to have to be smart and on your feet. You're going to have to think fast to do this. Mark's going to cover that the documents came out yesterday. It's like a 9-page loan document for the IRD one. Most of the banks who are operating under the bank government loan partnership, they've got some restrictions in there around how and when they can lend. And that's based on the fact that, remember, when you're getting annoyed with your bank, the government's put these lovely little things in place, like the Responsible Lending Act and those kind of things. And they have some pretty big impacts on the way banks can lend. So there's some stuff that is coming out with that. So let's just come back to this initial one, Mark, and we'll let you kick off with the whole thing around the IRD loan scheme, and then the banks, and then we'll kick into what either party needs to, what you need for either party and what you should consider before taking on board that risk.
Yeah, I think you've touched on a point right at the end there, what you should consider for either party. My view is these small business loans that the IRD, I mean, it's not IRD money, but they're administering the scheme. They need to be treated like any other application for funding from another financier. This is not free money. There are consequences if you don't meet your requirements under the loans if you take one. The loan documentation was issued yesterday. As Logan said, it's a 9-page document. There's some interesting stuff in there, which I don't really want to go into in detail now, but we'll put a brief item together on just some key parts of that documentation to pay some attention to if you're thinking about applying for one of these loans. How do they work? Well, up to a 5-year term, up to a maximum of $100,000, and that's assessed at the rate of a flat $10,000 plus $1,800 per full-time equivalent employee. So that'll get you up to 50 employees, gets you up to 100,000. Don't have to apply for 100,000. You can apply for less, but that's your cap. No interest is charged at all if it's repaid in full within 12 months. If it's not repaid in full within 12 months, that 3% interest is accrued and just rolls forward in the normal way. No principal is required to be repaid until 2 years have passed, you can make voluntary repayments prior to then, but no principal will be required to be paid for the first 2 years. But the key thing here is ultimately it has to be paid back. So one of the requirements to be eligible for this is we must be dealing with what's been referred to as a viable business. And something we don't have guidance on at the moment is what exactly this thing, a viable business, means. Who's going to determine whether it's viable? What level of proof or documentation is going to be required? Is it simply the owner saying, yeah, I reckon it's viable? Is some sort of accounting sort of sign off going to be required? You know, who's going to make that decision? So I was checking just before coming on for the webinar just to see whether anything's been released, because you can apply for these loans from today. So I would have expected some guidance around this issue of what's a viable business and what's not. The key thing here is this is not free money. It is going to have to be paid back sometime. So you've got to make sure, you've got to make sure that you can pay it back. If you miss out, if you don't meet your obligations under this loan document, you get charged the use of money interest rate plus 3%. That makes it pretty expensive funding. So you don't go into this sort of half-cocked. You need to be certain that you're going to be able to meet your obligations, because the IRD aren't the sort of people we want sort of chasing you.
I think just on that thing there, I think one thing I want to highlight is the 3% plus the use of money interest. And I think maybe you and I'll just go backwards and forwards pretty quickly on that. So what's the UMI rate at the moment, Mark, roughly?
Don't ask me difficult questions like that.
It's like it's some astronomical percentage, right? Yeah, but remember, you're adding it to 3%, right? And I think that's kind of critical that we sit there and you go, look, if you're out of terms on this, you're gonna have some trouble. And I think it's just like, I'm concerned, and again, it would be remiss of us not to mention it, you're potentially changing your stakeholder relationship with the IRD.
Yeah, so, and there's a key takeaway here, really, and it's and we're probably going to mention it a few times. The key here is understand as best you can your own business cash flow today, tomorrow, next week, next month, 6 months time, 3 years out, whatever you can do. You can't be an ostrich on this stuff, and it's just, as I say, treat it the same as going to see the bank to get funding from them.
I think the critical thing is you've got to have, and when we talk about the banks and any other lending that you've got to get your last signed financials and tax returns there, which should be 19s hopefully. The draft management reports for 2020 should be there. You should have a basic budget cash flow going forward to 2021, and a one-page, even if it's a basic scratch out business plan idea. What are you going to do? How are you going to deal with your customers, your suppliers? How viable is your business? At least put that somewhere. If you're going to apply for the bank ones, all the banks I think now have got an application form and a basic business plan outline that works for them on their ones. Okay, so if you're dealing with the IRD one, if you've got tax arrears and some other stuff and some compliance issues, I'm not quite sure how that's going to go yet. I don't really know whether the IRD is going to give you money, and then are they going to give it to you and then take it back for tax? One of the other things that comes up on all of this that I want you to realise, and again, is it says like the IRD ones to pay your suppliers, your landlords, those kind of things. That doesn't mean pay all of them now. So when you've got suppliers and landlords potentially coming back to you going, well, you can borrow this money, you can get in there and you can pay us all the rent. It's to help you. It's not to make everyone else's life pain free. So when you're dealing with this stuff, it's about pain sharing. It's not about sitting there and going, well, if I take this, I'm just going to have to give it to the landlord. It's those kind of things that you have to think about. It's assistance. It's not a catch-all for everything, and it has consequences, especially when you're lending money. One of the things I think you should be doing on all of these forums is if you think you need them, like you need to register the bank with it, or you need to register for the IRD, register. I'm only concerned about when you take the money, so when you draw down. And I don't think registering an expression of interest with the IRD when they finally get their forms out, and again, you can see what we're battling. You can see it that we don't have the information about what is a viable business. So you want to come to us and you're going, where's the info? You're the professionals. Well, we don't have it. It's not clear. And if it is clear, I haven't seen enough other dialogue around it yet, because it takes a bit of, there's some really good reasoned minds out there in tax and finance, and they need to be able to discuss and debate that before we go off and go, yeah, do this. So at the moment, all I'd be saying this week, especially because it's budget week, I wouldn't be suggesting you draw down on any of this money yet this week. I'd be suggesting hold back. Let's see what's happening with the budget. So your call to action here is get those financials in place, get that information, get your basic stuff done, get your zero file or whatever it is, get a P&L and a balance sheet done, get your cash flow forecast and a basic scratch up. Come and see us, we'll help you package it together. Do not go anywhere with that information without it being in place and understanding what the provider is going to need exactly, because you'll go much further up the queue if you're organised and you look organised, okay? Next one.
Just want to jump
John,
in there.
you want to say something?
I just always want to say something. Just great seeing your passion there, Logan. I want to say thank you to all the people that have put in some questions. Ethan, Ronnie, Chrissy, thank you so much for your questions. And James, if your question, we will come back to you after the webinar. But back to you, Logan, for the next topic.
Cool, mate. We're into it. Budget. Okay, so we've got the budget. I think this, hopefully, if I'm right, and I paid any attention at all to what was being told to me about what I was supposed to talk about, that budget's hopefully the last thing you had to suffer through from us, really. So, look, this is a massive thing this week. I'm going to let Mark kick off here because he's quite passionate about the budget, and it's sort of something that is, I think, dear to his heart. So let's hear from Mark on it, and then I'll wrap up with it.
Yeah, I don't know about dear to my heart, but let's not go there. Look, tax advisors all around the country used to look forward to budgets because there inevitably used to be some interesting stuff in there for tax people, that is. The last few have been monumentally boring. This one's going to be different. Now, whether there's a whole lot of tax stuff in there or not, I don't know, but there's absolutely going to be a spend up. Not only is it election year, so there was always going to be a spend up. There's a hell of a lot of money that's going to be spent on who knows what. We know there's going to be a lot of infrastructure related spending, even more than what had already been announced. But actually there hasn't been a lot coming out yet in terms of leaks or advanced information around what else is going to be in there. But there's definitely going to be a lot to digest. And I think one of the keys is going to be, as is always around these things, there's going to be a lot of noise and a lot of emails flying around about this was in the budget, this was in the budget, and this other thing was in the budget. The difficult thing sometimes is to say, what does that actually mean to me? A, can I understand the detail? Is there detail at this stage? If there is, can I understand it? And thirdly, well, what does it all mean to me? So, look, you said before, Logan, now's not the time to be making sort of probably critical business decisions when we've got a budget, you know, sort of 48 hours or a bit more away. I'd be holding off until at least Friday or even early next week if possible to let a little bit of the dust settle around it and actually understand practically what we're dealing with and what might sort of lie in our futures, because I think there is going to be a lot to digest from Thursday. Look,
my strategy here on this is this is one of those areas that really needs the critical minds to have that debate, right? So sometimes you'll see the stuff, just let these guys, let this stuff drop on the table, let these guys wrap themselves up into a lather and thrash themselves out over the weekend papers. You'll see Cameron Baggery and the rest of them, they'll all go to war over it and let them have their fun. And then probably by Monday, we'll have some common sense, hopefully, possibly, probably not. So let the left and the right, the communists and the capitalists, let them go to war. This is going to be a pretty good fight over this one. It's going to be some good banter out there in the public, and it might be as good as a decent All Black South Africa Test match, I'd say, if you want a bit of the old rugby analogy in there, if you want to put that in somewhere. But coming back to the serious parts of it and pulling that back into some kind of context, what we're saying is, look, we're not going to go out early. We'll probably come out on Thursday afternoon, Friday morning with some headlines, right? So what we'll say is, we'll just say, hey, look, here are the key things that are potentially in the budget. We're not going to digest them. We're going to come back and we're going to put something out Tuesday, because really we want to wait till that stuff's digested. And we don't see, given the long run nature of this thing, if you're having to make decisions between now and Tuesday, then I'm a bit concerned. I think you've got to kind of go, if you're being pressured in that sort of stuff, take a bit of a longer term view, because there could be stuff in this package that's really going to affect you that you just need to be a bit patient for. And I'm sorry, I get it. Jacinda's got the comms real tight. Everyone's too scared to say anything. I reckon that's the scariest thing I've seen. There's too many people in the Labor Party that are scared to leak anything. Even Winston's quiet, I think. So it's pretty well under wraps. And look, you know, they may be politically grandstanding on it. Maybe they're using it for electioneering. But I mean, you can't blame them for that. That's just, you know, that's playing the game. So look, the critical thing is we'll look at it. We'll get the best cards on the table. We'll have a look at that next week. But the strategy is I think to come out of this is don't knee-jerk react now. Sit there and be really patient. What are we, and let's digest this budget on the weekend, and that will come back Tuesday with some real decent analysis that we've picked up from the other guys. Maybe I can sneak a guest commentator in here. I don't know if I will be able to, but I'm going to try. In addition to Mark and I, and the guys behind the scenes running this webinar are probably rolling their eyes already at me now, but bugger them, we don't care. We'll just make that one up as we go along. But Mark, do you see anything critical that might be in that budget? Have you got any key headline things that, you know, without putting you on the spot too much, what maybe a couple of things you might expect? Come on. Reduction in GST, you know I want that one.
Yeah, look, I don't think there will be. Look, people talk about taking GST off fresh food and veggies, GST rate reductions, things like that. I don't see that. I see them as being quite difficult to implement.
Yeah.
I think there are easier things that could be done. The big question is what's the magnitude of, you know, of cash delivery that the government or the government advisors and the experts in Treasury and Reserve Bank and wherever else are saying needs to be, you know, what needs to be injected and over what time frame and what's the profile of that injection. So look, I don't see them meddling with GST. I don't see tax rate reductions. Because I think give it 2 or 3 years and any tax rate reductions are going to need to be reversed to start paying off the deficits that we're going to be running up. So, and that politically is sort of hard to do. So I don't think they'd want to risk reducing rates now. What I do think they could consider is plenty on the deductibility side of things for businesses. So increase the ability to write off. I think they should have a crack at fixed assets and capital investment and R&D. I think there are obvious areas to try and get the economy sort of moving and people investing and building new infrastructure. But look, I think this year's been unusual in a way because normally I think we like to think we've got a reasonable idea of what might be in the budget by now, but it's just, as you say, it's been very quiet. Jacinda's got everyone handcuffed and gagged down in the dungeons underneath the beehive, I reckon.
We're not supposed to be politicising this, but I just find it amusing. I think they're a bit scared, eh? Look, I think coming down, the last thing to think about this with budgets and this stuff is it's a lot of what they do is macro rather than micro. So if you can imagine, I think the easiest way to understand economics, if you find it hard, is the budget at the moment, in my view, is about the volume and the velocity of money in the system, right? So what happened was we shut everything down hard, and it's like what we did. It was like a cruise ship coming in with the virus on it, literally throwing that pick out and stopping straight away, and everything coming off the deck, like the deck chairs and everything going into the sea, right? So the problem you've got is the velocity of money around the marketplace. So money flowing around the economic system, the volume of it and the speed at which it flows around is kind of what insulates the economy. And so a lot of the things they're going to be doing is why they want you to take the wage subsidy. The wage subsidy was about as much as sometimes a company that doesn't need it, they might be a big organization. The first thing they do is squeeze down on their creditors, right? And so the wage subsidy, although they might have not needed it, but because they had the reserves, they were able to access it, so it kept them spending. Because what the government doesn't want is a massive drop in the volume or velocity of money in circulation and going around, right? Because that makes it worse. So what you're going to kind of see with this budget, I think, is things that you might not see the direct levers on or the relevance of, but they should be things that keep for now the velocity of money, which is the speed at which it moves from person to person to person or business to business, and the availability of it in the marketplace high enough to keep everything going. So again, the key takeaway is, look, wait for Thursday, have a look at it, wait for some decent digestion that's coming out. You know, most people should know where the good political commentators are. God forbid you might have to go to the Herald. You should get something decent in there, I'd hope, or Interest or a couple of those other ones. The spin-off's not bad. Go in there, have a look at that. John.
Question time now, but for the people who came in a little late, and you're thinking, did you miss some critical information that Mark or Logan delivered? Don't worry, at the end of this webinar, we're going to send you an email and it's going to have the recording of the actual webinar, so you can digest that information yourself, or you can share it with your colleagues or other stakeholders. There will also be some instructions in there to let us know how we can better serve you and how we went in this webinar. Our first question came from one of the registration early birds. Question for you, Logan: ability to seek return to payments based GST because of anticipated turnover drop below threshold. Do you know what that means?
That's probably a Mark question. I can answer it, but Mark probably feels it's probably an easy one for him to start with. Little baby question. No
pressure. Yeah, I think I saw this question come through earlier, and it's about whether a business which currently on invoice basis for GST can use COVID-related reductions in revenue to or anticipated COVID reductions in revenue as a basis for as a justification for going onto the payments basis for GST. Yeah, absolutely you can. There's nothing in the GST rules that says, well, if it's COVID related, sorry, that doesn't count. So the two criteria are you need to be under 2 million for previous year or expect less than 2 million taxable supplies in the forthcoming 12 months. So if that's the situation, then you are entitled to move on to the payments basis. And as simple as that. Look, guys out there, if that kind of gets a bit woolly because you don't actually know what basis of GST you're on because somebody else does it in your organisation, what we're talking about is instead of it being based on the paper money or the sort of the money that you get in terms of what you bill and what you're invoiced, you know, your technical stuff, you can pay GST on based on the cash that comes in and out of your bank account, and that might be a more affordable solution for you. So again, if you're confused about that question, all you've got to do is figure out what basis are you currently on for GST, and then two, what basis would be best for you to be on GST in your current environment, and come and seek some advice. That's all you need to do. Don't worry about whether you understand it. Go, am I on the best GST basis? What is it? Come and see my advisor. Next question, John. Next question that comes from Ethan Rubin. Can farmers apply for the wage subsidy? I'll take that as well, eh? Look, the wage subsidy is in no way industry or sector specific. So if a farming operation has employees and can show us an actual or anticipated 30% decline in revenue over a 30-day or month-long period, then you're in. There's no special carve-outs for farming operations. So if that's the situation, then you meet that key eligibility criteria and certainly consider applying.
Thank you, Mark. Another question from one of the registration early birds. How will these issues affect property investors, both residential and commercial? Who wants to crack at that one?
Off you go, Logan, your turn.
What was the first part of that question? You just dropped out a bit. I've got the property developer.
How will our, you know, what the issues affect property investors, both residential and commercial? Well, look, the commercial guys have got there's some interesting stuff there. They've allowed depreciation on commercial buildings coming up from the 2021 tax year. Mark, that's correct, right?
Yep.
So
yep,
look,
correct.
Some of these things I asked Mark whether they'd consider reducing or removing. I think they're kind of alluding, is there any possibility that they'll remove ring fencing or bright line from things like the residential stuff? And Mark just went like, no, there's going to be no chance that that's going to change. I don't know, has your view changed since last week on that one?
No, look, I think residential property investors are one of the whipping boys at the moment, so I can't see there'd be any move around ring fencing of residential property losses. So I think the thing is the residential sector is probably, we don't think they're going to get a hell of a lot of assistance in terms of government stuff. It's purely driven by supply and demand. It's not that we don't care. We'll have a look at the whole residential sector. I think their industry lobby groups are going to have to get together, like the Property Investors Association. There's a bunch of those guys, and let's just see what's happening whether tenants can't pay their rent. Maybe what we'll see is rent subsidies for people that can't pay. I think it's going to be more, the support around the residential side is going to be more for tenants than it is for landlords.
On the landlord side, if it's commercial, I think what the government's been very reluctant, even more reluctant than Italy, Australia, and the UK to step into that relationship. So you've got a socialist government per se, and they're not willing to really step into that area. So my gut reaction is there'll be incentives for commercial property investment, construction, building, depreciation, that kind of thing. That's where I think it's going to be. So what you want to do is, it might pay to get get a valuer to assess your property and look at the splits between fit out versus the building shell, maximize your depreciation claim that you can get for the current year. You should be looking at your cash flow budget, because depreciation, although it's not a cash item, will affect your tax. So if you've got a significant building and all of a sudden you've got that 3% loading on it, there could be something there. So that would be what I'd say there.
We have a question from Ronnie, and she said, see the wage subsidy extending for industries impacted beyond level 2, particularly travel agencies.
Mark.
Come on,
Yeah,
Mark.
look, I think there are some industries where an extension of the scheme would be justified. I'm not sure, now that we're moving to level 2 and people having to grapple with what that means to them, I'm not sure that a carte blanche extension is really on the cards, but certainly an industry specific one I think would be justified. The practical problem there is, how do you define the industry? And for example, you have businesses that are involved in several different activities. So how would you define that industry? Maybe you do it based on ACC classification codes or something like that. But yeah, I certainly think there's merit for it, and I'm hoping that's one of the things we hear about on Thursday in the budget. Whether it happens or not, yeah, sorry.
Look, I think in that area, you just need to be, look, the Council of Trade Unions and several of the industry groups, like I know Tourism NZ, the Hospitality Group, Council of Trade Unions, those guys are all pushing the government hard for you guys in those sectors. So, there's groups there that are lobbying really hard around different industries. They're there a lot, right? And I know that there's different people that have had the ear of government. So you might not see it, but they're getting the word there. I know they are, because I've seen the private comms, and I've actually edited and worded a few of their letters to government already.
It is
another question for
you as well. So there is the opportunity for industry and sector bodies to really try and throw some weight around. It is election year still. There's been no news of a deferral to the election. So use the timing that actually probably is in your favour, and put them under some pressure and put the hard questions to them and see what you can get.
John?
How do you forecast revenue in a market with so much uncertainty?
I know, it's
You're
hard,
not going to leave
right?
it to me, are you?
Yeah, no. Don't you lick your finger and feel for the wind? I mean, look, I get it. I totally get it. It's really hard. There's no, but you sit there and maybe you poll your customers. You look at that stuff and you go, look, who's there? What's there? Maybe you got to do a couple of scenarios. Well, what's the worst case scenario? I'm going to lose 75% of my revenue. Am I going to lose 50? You're going to have to look at, that's what I was saying. These things are very broad brush. So sit there and go, look, I think the first thing to do is go, am I going to lose half my revenue? And then if I'm going to lose half my revenue, what am I going to do with my overhead, including my staffing and that kind of stuff, right? And then go, what subsidies, grants, debt, what, and then go, the other thing is, when's it going to come back? When's my revenue going to come back? I don't know. So it's a guessing game for everybody, which is why if we look at that sort of stuff, I talked about the guys, Steve Lawrence and Chris McCulloch, PFK, about some of those extensions. We've got to see a little bit of space around insolvency or basically practicing, businesses trading while they're insolvent. Look, there's stuff coming on that. I don't think anyone's really going to hold it against you. I'll go out on a limb on that one and go, look, there's guys out there, Damien Grant from Waterstone, he'd come out and said, look, all these incentives and stuff, they're going to create zombie companies that are all going to just be the living dead, that are going to be axed in a month or 6 months. Well, look, the reality is around that sort of stuff, yes, that might happen. But just like you couldn't have like COVID patients, everyone dying all at once and overwhelming the health system like New York, it's not a good thing to have all the businesses dying at once either. So yep, there's going to be a bit of traction. There's going to be a bit of like slow train wreck stuff, and I'm actually okay with that. I'm fundamentally okay with that. Like people need time to adjust, and if the money's going down the river, it's not wasted money as long as it goes back around the economy and goes as it circulates back around. Some of the creditors will get paid. It's a controlled train wreck, and that's what it is. I'm empathetic to my clients around all that stuff, and I care about them, and it's a terrible bloody thing for some of them to be going through, but equally, you know, having something and then having to make these decisions, it might not be a realization for them today, and they might not be able to get all that cash flow done. I'd rather they did something. How accurate it is, I don't know. Just do something. Something's better than nothing.
All right, we have a question, a couple of questions from Chrissy. Chrissy is a first time in a webinar, and she's rocking it. Chrissy's Chrissy says, if you're a one-man band and do not draw an official salary, are you still entitled to apply for the wage subsidy? She says, I'm 100% down in income and have been living off very little in the last 6 months, but do I qualify? Mark?
Yes, you do. Same criteria applies. So if you're in business for yourself, essentially a sole trader, then same criteria applies. If you're expecting a 30% or greater decline in revenue over those time periods that we talked about, then you're treated just the same as any other business. You are the employee, basically, but same criteria apply. So if you meet that 30% threshold, or you expect that you will meet that 30% threshold, then the wage subsidy has application to you.
James Munro has a question. Will the NZTE grants cover things for strategic planning, for longer term capital raising, etc., that you know of?
Mark, do you want to do that?
Now, I saw some information come out either late last night or early this morning on this, and there's quite a broad category of advice in there called, I don't know if I've got the paperwork with me, but financial and something else management, which to me, when I read that, it's like, well, just about anything could fit under there.
Yeah, I think it does cover it, Mark.
Yeah, so my take on it was, although that sounds incredibly broad, that strategic planning, like what you're talking about there, and even insofar as and capital raising, etc., would be included. So look, no harm in giving it a go. You make an application. If they don't think it meets the criteria, they say no, you're no worse off. So, but to me, by my reading, that would be included. So I don't know if you've seen anything different, Logan.
Look, come and see us. We'll help you frame it up. It's all about how you frame that stuff up. We're not asking you to do anything dishonest or weird or manipulate it. But again, there's so many categories in there. There's a huge number of categories. It's about how you frame it up. And remember, different organisations, it's not just accountants that you can get these grants from. So what I'm saying is you need to register, and then there's different organisations that are getting it. Some of the bookkeepers are getting it, HR and legal guys are getting it. So there's different places. It's not just, you don't just need to see it as us. What we're trying to do is go, hey, remember that multiple channel of help? John?
A last question. I think we've got time just before midday. This is from Judith, and it probably leads into our next webinar, which is on next Tuesday at 11 a.m. And that is dedicated to the budget. And Judith says, do you think the government will have learned anything about business and the business world, how it suffers from such an extreme action they took? They had a great microcosm example of Christchurch earthquake and the aftermath of when business was closed. Could they have extrapolated the impact and the length of time to recover? Political question, perfect for next week. Thank you, Judith, for your question. Logan, you're particularly adept at the political question. Your favorite
topic.
I agree.
Look, there is no two ways about it. That there'd be no government, well, they shouldn't be there if they don't. There'd be no government that hasn't reasonably well studied the 1914-1918 war, the Spanish flu, the Great Depression through the 1920s and 30s, and the Second World War. You'd be living under a rock if you couldn't see what kind of things that are happening, right? So whether or not they've responded to it well, they would know. Look, we've lived through 75 years of golden weather since 1945, in my personal opinion, right? And I think it's the problem is what you've got is it's like we haven't played this game for a while. So if you said to me, well, look, the government's on hand from 1945 and they're going to roll into this thing, they'd probably do a better job because they've been playing that game for a while. And this game's jumped up on them, and it's up to us to make sure we hold them accountable, right? So have they got it right? No. Were they going to get it right? No. Would National have got it right? No. None of them would have got it right. What the thing is, it's not about what you get right, it's what you do when you get it wrong. So I'd expect to see the government say sorry a lot and fix stuff, right? And I'd respect them for that. So what I'm saying is you're not always going to get it right. That's that sort of thing. They're not always going to explain stuff at a macro level because you're sitting at a micro level, right? So it's up to us again. I sit there, I empathize with everybody, but we've just got to keep pressuring them to get these results.
Thank you, Logan. Thank you, Mark. I think we are drawing to an end. It is just after midday. We want to announce the 3 remarkable Chocky Box winners. And congratulations to Ethan Rubin, John Mason, and Angela Ray. We have taken all the attendees, put them into a draw, a random number, and Ethan, John, and Angela came out with the Chocky Box. We have your details. We will be in touch in getting that those prize packs to you. As we said before, at the conclusion of this webinar, you will be sent an email with the actual recording, so feel free. This is great information, and we'll be doing this each and every week. Please send that out to your other stakeholders and your other business colleagues. There'll also be a short survey where you can tell us how we've gone and how we can better serve you in future webinars. We really hope that you got some value today. We're committed to giving you more value over the next 6 weeks, or say the next 5 weeks, with our next live and free webinar next Tuesday at 11 a.m, the budget special. We will send out the invitations in due course. So on behalf of Logan Granger, Mark Davies, and the entire Jackal team around the country, north and south, I'm John Maybury. See you next Tuesday at 11 a.m. for our next webinar. Good afternoon.
Cheers, everyone.
See you guys. See you later.